intended to be investment advice. It certainly doesn't constitute investment advice, financial advice, trading advice, or any other sort of advice. And of course, investment advice is something that you should seek from a professional investment advisor. So with that out of the way, I'm just going to kick off with a quick introduction to tokenized precious metals. So for those of you that aren't familiar with the expression tokenized precious metals, we're going to explain everything about that you need to know today in this webinar, and also give you some context to where precious metals in a tokenized form sits in the broader spectrum of the tokenization opportunity and exactly what that is. So some of the things we're going to talk about, precious metals such as gold, silver, and platinum have become a really quite popular wealth strategy, particularly over the medium to longer term. But they're still very inconvenient to buy, sell, store, and transport. So we've actually done a lot of work to create a better way to buy, hold, and sell precious metals through tokenization. Tokenization makes purchasing precious metals easy and secure, and precious metals, gold, silver, and platinum are now easily accessible through the Daxi Wealth platform. So I'll expand on all of those points through the presentation. So some of the areas that we want to talk about, a little bit on the history of precious metals, building wealth through precious metals, how we transform the ownership of precious metals through tokenization, a little bit more background around asset tokenization generally, not just specific to precious metals, the benefits of that tokenization, and then we want to talk about some safety and security points, which are obviously very, very important. So a little bit on the history of precious metals, and some of this will be known to you, and I suspect some of it probably isn't. So look, gold coins go back a very, very long way, over 500 years BC. And by the time we got to the 19th century, or certainly the late 19th century, significant number of the world's major currencies were really fixed to gold. And so what that meant was that governments around the world essentially made sure that they backed their local currency with a corresponding amount of gold to the same or similar value. In 1861, the US Treasury printed the first US paper currency, and it wasn't until 1971, which is obviously a long time later, that President Nixon removed this gold backing to the local currency, to the US dollar in the US. And really the era of what we call fiat currency was born. Today, we've obviously seen an extended period of government stimulus. We all understand there's been various contributing factors to that, which essentially is code for printing money. It's contributed to multiple challenges. Inflation is one of those. We're in a period now where the economic outlook is less certain. And so it's perhaps understandable that gold and other precious metals are starting to gain some popularity as a wealth building strategy, and also for wealth protection in less certain economic times. If we look at just a quick history lesson, so this is a 20-year history as it relates to the price of gold. And look, what's interesting is if we look to the right of this chart, you can see that in the last 2 years, gold's been trading in this range of 55,000 US dollars per kilo to 64,000 US dollars per kilo. It's been very much in that range over the last 2 years, and clearly over the 20-year period, it's gone through a very strong increase in value, as you would expect, given it's a 20-year time frame. Silver also has a very, very long history. It goes back to 600 BC, and silver coins first appeared in Turkey, as far as we know, and their popularity really grew through the period of the Athenian Empire. The British pound, a little bit of trivia, the British pound itself actually refers to a pound of silver. And silver was used to mint everyday currency in the US until 1964. Interestingly, silver has really now evolved to have a large number of industrial applications. It has more industrial applications than gold does. So the industry or the industrial sector is the single largest source of demand for silver in the world today, and it's approaching half of the world's demand for silver comes from industry. It's a smaller market and it has lower liquidity as an asset, and so this makes its price a little bit more volatile than gold, for example. And so because of those attributes around liquidity and price volatility, it's positioned really to sit as a separate part of a balanced precious metals portfolio. And so silver exhibits those different characteristics that really makes it a discrete consideration within a portfolio of precious metals. And then if we look at something like platinum, it was the European scientist Julius Caesar Scaliger that first identified platinum as a distinct metal in 1557. So its history obviously doesn't go back quite as far. And initially they thought it might be silver, but he identified that it was actually a different element. And today, South Africa is the world's largest supplier of platinum. About 1/3 of it is used in the automotive industry. Again, it's increasingly used in industrial processes and in particularly high-tech products in and around things like electricity and battery technology as well. It's widely used in jewelry making, which I think we're probably all aware of. And really its scarcity and its versatility puts it in this same category as gold and silver as an investable precious metal and a distinct asset on its own. So when we think about building wealth with precious metals, I guess the first thing to remember is that precious metals, just like any other asset class, really should be looked at through a lens of wealth building first principles. And those principles they never change. So the first of these is take a portfolio approach, okay? Diversify, have a range of investments that extend across a range of investment classes. And the balance of that portfolio really needs to be geared to things like your appetite for risk, the time frame to harvest, and obviously very specific goals or objectives as it relates to building wealth. But this concept of a portfolio approach where you build a position across multiple assets and classes and therefore spread your risk is incredibly important. So that doesn't change whether you're investing in precious metals or any other asset class. It really should be one component of many within a portfolio. If we take a look at the different asset classes that can be invested in today more generally, it's obviously a pretty challenging period. Okay, we've got a lot of uncertainty geopolitically. Inflation is really accelerating and is expected to continue for the foreseeable future. We've got the threat of recession in various markets. We've obviously got the interruption of COVID and the supply chain interruption that introduced. So there's all of these uncertainties which combine to create uncertainty as it relates to investing generally in terms of which asset classes should we be investing in right now. Equities are going through a cyclical shift. There's been a period of inflated values. There's been a period of price correction. We've seen that in some sectors of equities more than others. But I think anyone that looks at their superannuation returns, if you're in Australia, or investment returns generally in equities over the last 6 months in particular, it's obviously a pretty challenging market at the moment. Property, again, has softened in a number of first world economies. It's expected that it's going to remain soft, and in some, in fact, further decline is expected. Cash rates are very low if you're looking for return on cash investments, and crypto returns remain very high potential, but also very volatile. So there's a lot of uncertainty if you look at the spectrum of some of the more common or recognized asset classes, that spectrum as it relates to where should I be investing or what should I be thinking about as an investor across that spectrum. So this means that precious metals as an alternate asset class, it introduces unique attributes, and we think that those attributes are really worth a look and a closer look as it relates to understanding how it fits into that portfolio approach to building wealth over the medium to long term. So look, we understand that things like gold are the world's oldest asset class, or precious metals generally. Precious metals tend to be, as the price characteristics is that over the longer term, it tends to be more stable and less exposed to developments that may negatively impact other asset classes. So that characteristic of somewhat more stable is an important dimension when you're thinking about the role of precious metals, not just across a portfolio, but in a period of less certainty. It remains the primary trusted store of value in many countries in the world. So in many countries that hasn't changed. And obviously there's more of a focus on the performance outlook for other asset classes as we get to the end of this period of stimulus and all the implications that I've already talked about. So again, precious metals exhibits different characteristics that in the sort of uncertain times that we live in at the moment economically, now is really a good time to consider if diversifying into precious metals, if you haven't already, if that might be right for you based on your wealth strategy and objectives. So there's a couple of different ways that you can do this. So you can invest in the physical metal. You can go out and you can invest in and own a gold bar, for example. There's a lot of logistical issues associated with that around convenience, safety, storage, and also the cost associated with all those things. You can invest in ETFs, which is a financial instrument that's exposed to, for example, precious metals, but it's actually not the same as owning the precious metal itself. Okay, so it is exposed to institutional trading dynamics in a way that the physical metal is not, or is certainly less so. And there are other questions around ETFs in relation to the backing that sits behind those ETFs. So ETFs are a different way to get exposure to precious metals, but they come with their own set of challenges. You can, of course, invest in equities, for example, shares in the mining companies that are mining precious metals, but it's really very different to owning the precious metals itself. So mining companies are obviously very speculative. A mine may or may not be successful. The yield of that mine may or may not be sustainable. And the value in the mining share may not reflect the underlying value of the metal. Tokenized ownership, however, this is a new method of having ownership in the physical metal, but it comes with a number of distinct benefits, unlike owning the physical metal where you need to address issues like convenience, safety, storage, and the cost of those things. So I'm going to talk a little bit now about this concept of tokenizing precious metals and what that means for investors that want to get exposure to precious metals. So we call this precious metal ownership transformed. So we've talked about some of the shortcomings of ownership of the physical metal itself. And so this is where we've created a better way to buy, hold, and sell precious metals like gold, silver, and platinum using tokenization. So what do we mean when we talk about tokenized precious metals? So a token is a legally binding record of ownership, and it solves all of the physical ownership issues because it is a digital representation of your ownership of the physical metal. So you own the physical metal, but the digital representation means that you don't have the issues around how to store the metal, how to keep it safe, and all of those other issues associated with the physical metal itself. So the physical metal that is owned by each of these digital tokens the physical metal that corresponds to that token. So let's imagine you've got a token that represents $5,000 of gold. The physical metal, the $5,000 worth of gold, is actually securely vaulted and linked to that digital token. And we vault it with one of the world's leading bullion and vaulting providers. They're also a supplier for the Australian government. So they're one of the world's leading providers in that space. So they're a bullion provider. They vault the precious metal on behalf of the token, the owner of the token. And those physical metals are audited and reconciled to the tokens that have been issued. So in other words, it means that at all times, the total value of the physical metal that is vaulted through that vaulting provider corresponds exactly to the total value of the tokens that have been issued that represents the ownership of that physical metal. That's also an audit that's done independently and every month. So every month that audit is conducted to make sure that the physical metal corresponds exactly to the digital tokens that have been issued to represent that physical metal. This is something we've been doing for over 2 years now. We've had, great success with it. It's been quite new, and that's now changing. And I think people are understanding that precious metals is actually a really good candidate for tokenization. This idea of a digital instrument that records my ownership, and I see that corresponds to the physical metals, but I don't have all of the issues associated with having to hold the physical metal myself. It also means that through the token, precious metals can now be bought and sold at market rates in an instant. And I'm going to expand on that a little bit in this presentation around exactly how you do that. But it also means the environments in which you can actually trade those precious metals through the digital token are safe and they're convenient. And the tokenized precious metals provide instant access for all investors. So hopefully that part of the presentation is clear around what tokenized precious metals actually are and a little bit about how they work. So I'm going to move on now to a little bit more around how the tokenization itself works. So I've talked about this idea that each precious metal token is fully backed against the corresponding physical gold, silver, or platinum. That physical metal is stored in the vaults of our bullion provider. The matching tokens are stored securely in digital wallets on the DAXI Wealth platform. Okay, so that's in a secure environment in a digital wallet on our wealth platform. And those tokens are fully redeemable whenever you want to sell. So once you take ownership of the token that represents the metal you own, you can sell that token at market rates at any time through the same platform. You can do that instantly. So it's very easy to get in. It's very easy to get out. You have physical ownership of the corresponding precious metal, but you don't have any of the issues associated with that because the instrument through which you get in and you get out of the market is this digital token, all of which can be traded through our platform. And of course, the other benefit is you can buy in any denomination. So you can buy a fraction of an ounce. You can buy as much or as little as you might choose to. So hopefully that explains a little bit about how it works mechanically and what that translates to in terms of the individual investor's participation and ownership and this ability to invest in and then sell those precious metals through the digital token instantaneously. So really, one of the ways we think about summarizing this is that the ability to build wealth securely through precious metals is now more accessible than it's ever been. And I'm going to talk a little bit more about what I mean by accessible. I'm going to talk a little bit about how you actually set up an account to invest in precious metals specifically. So what I've talked a little bit about here is the tokenization of precious metals. I just want to expand that briefly to talk about tokenization more generally. So what is this term that you've probably heard of called tokenization? So the underlying technology that makes this possible is the blockchain technology. So blockchain was created in the process of Bitcoin being created. So the underlying technology that makes Bitcoin possible is blockchain technology. And that technology has now been adapted for a whole range of different uses, including this idea of owning all sorts of different assets through a digital token that is represented through this database called a blockchain. So tokenization is quite simply the process of creating a digital version of a physical asset. So a digital representation of a corresponding asset that is a physical asset, often referred to as a real world asset. And there's all sorts of different asset classes that are already being tokenized through the innovation of blockchain and the convenience that that offers. So look, DAXI is very much at the forefront of this wealth creation transformation, while most financial entities are only just starting to realize tokenization's full potential. So we're still in the fairly early stages of this journey around tokenization of all assets. But the opportunity for tokenization is absolutely limitless. And the way I would encourage you to think about this is that we're really on this sort of digital journey that started with digital communications, moved into things like digital finance and banking, moved into digital media. And so the idea that the assets that we invest in and we hold at different times of our life would be represented digitally is really just an extension. And it's an absolute inevitability. And blockchain is the technology that makes the ownership and the investment in different asset classes makes that possible through this concept of tokenization. We've talked a little bit about how tokenization works for precious metals. And look, really, just to share a little bit more detail with you, it's a very similar principle as it relates to tokenization of any other assets. So in the case of our precious metals, we've tokenized it on a blockchain that's called Ethereum. Many of you will have heard of or be familiar with the Ethereum cryptocurrency, which relates to the Ethereum blockchain. There is a standard smart contract protocol on that blockchain referred to as ERC20, and that is the protocol that we use to create the precious metals token. So it's a very well-established, well-known, globally accepted protocol for tokenization. Okay, when somebody invests in those precious metals and we issue the token, it's recorded on the blockchain. And so that becomes a permanent record of that transaction and the ownership of the corresponding precious metals. And so this is this concept that you've probably heard around the ownership of an asset is immutable, which just means once it's written into the blockchain through your investment and the issuing of the token, it's a permanent record on the blockchain of that transaction. Tokenization is in the process of being applied to a really broad range of asset classes, and the possibilities are almost literally endless. We've seen it apply to things like artwork. Many of you will have heard of things like non-fungible tokens or NFTs. These are just a different type of token that corresponds to an asset. Tokenization of carbon credits, real estate, things like music copyright, classic cars, the digital representation of the ownership of something that may not be digital is just quite simply what we're talking about here. And all of these different asset classes are either already in the process of being tokenized or organizations are looking closely at how they can actually start to tokenize these asset classes. And look, in many ways, this is representative of the mission that DAXI as a wealth platform is on. We are on a mission to tokenize alternative assets to make them accessible and easily available to everyday investors through a platform-based experience that makes it really easy for them to take a position in all sorts of different asset classes that align with their wealth strategy. Okay, so this is very much the mission of the the Daxi business generally, and also the Daxi chain project. The benefits of tokenization, look, we've already touched on some of these. I'm just going to reference a couple very quickly. There's a number of these that are listed in these slides. I think one of the obvious ones is that it creates a market for the token that has all sorts of knock-on benefits. So for example, liquidity. So property might be a good example of where tokenization delivers huge benefits around this concept of liquidity. So if you invest in a property, or invest in, for example, it might be invest in a growth company and take shares in a privately held growth company. The idea of actually being able to either buy into or sell out of that investment easily is extremely challenging. There is no liquidity, there's no market for the trading of that asset. By tokenizing assets, we can create a market, and we can do it at scale, which creates liquidity. So tokenization of precious metals is a great example where we can create a liquid market for that through the token that's been issued. The trading of those tokens becomes a liquid market. There's any number of benefits to that sort of scale. We've talked about point 4 here, shorter lockup periods, which really is this concept of being able to get in and get out on a time frame that suits the investor, not having to wait for some kind of liquidity event to participate in terms of selling out of an investment. So tokenization offers that as an opportunity. A much broader investor base is another example of the scale that tokenization brings. The ability to fractionalize an asset. So again, commercial real estate's a great example. Not many people can afford to go out and buy an entire office block if they wanted to invest in commercial property. But the idea that I could go out and invest in a tiny portion of that represented as a token, because tokenization allows us to take a single asset and turn it into many, many, many small components, all of which are represented through a token. So it creates accessibility and broadens the participation around different asset classes that otherwise historically have been very difficult for everyday investors to get access to. Broader geographic reach is in some ways a corollary of the same idea, and the time frame to transact in and out of these asset classes that are tokenized is just completely transformed. Trading real estate, for example, that's a pretty complicated process, multiple intermediaries. There's all sorts of time periods in different parts of the world around those transactions, whereas tokens can be traded instantaneously and completely transforms the investment opportunity in markets such as real estate and others. So look, there's a long list of all of the benefits associated with tokenization. I won't go through each of those, but I think some of the ideas I've touched on will hopefully make sense to you. Just to finish up on safety and security. So the precious metal tokens that we issue are protected by the same security measures as the cryptocurrencies that are traded on our exchange. So we've talked about this idea of the physical metals that correspond to your token being vaulted by an established world-leading vaulting and bullion provider. Only a small amount of the crypto assets that we hold on our platform, of the crypto assets, are actually kept on the platform itself. Sorry. So what that means is that the significant majority, up to 98% of the assets that are held by clients through investments on our platform are held securely in cold wallets with multiple keys. And what that means is cold wallets means they're not accessible through the internet. So it means they're very, very, very safe. Hot wallets are highly encrypted environments that are accessible through the internet, but the vast majority of all these assets are held in cold wallets when it comes to things like cryptocurrencies or crypto assets. So, and look, most of the cryptocurrencies we offer are also held through an independent third-party called BitGo, and they are a custodial provider, and they specialize in providing third-party independent custody of crypto assets, and we work with that provider, and they also provide insurance coverage for the assets that are held through that solution. So what it means is there's multiple layers that are all combining to make security a really, really important part of what we offer through this tokenization of precious metals, but across all of the assets that we offer through our wealth platform, which includes a very carefully selected a small number of investable cryptocurrencies. We've talked about insurance, this idea of cold storage and having a custody partner, and the fact that the assets that are held in cold storage, we also have insurance policies around those ever being hacked or stolen at any point. So it means that the investor is protected. Those provisions are incredibly important, and would encourage everyone to make sure that you've got that sort of protection on any of your investments. So in terms of sort of getting started, it's a really simple process. You can go to daxi.com. You can open an account. That is a really simple 3-step process. You create your account, you verify, there's a verification process to verify that account. And then you can literally go in and start to buy and sell. It's as simple as what you see on the screen here in terms of nominating what it is that you'd like to invest in. You can invest in individual precious metals, whether that's gold or silver or platinum. You can also invest in what we call a precious metals bundle. And that's just simply a bundle that contains gold, silver, and platinum, but it's just a single transaction where you can take a position. Again, this idea of diversifying, first principles of investing. You can take a position across multiple precious metals through that in one transaction through that precious metals bundle. So that's a really easy way to get a position across multiple precious metals. So look, that process is extremely simple. But of course, if you want to learn more, please, we encourage you to go to our website. We've got all sorts of information there as it relates to precious metals and the tokenization of precious metals, all sorts of information there as it relates to getting involved with our community, how to set up an account on our platform. And we've got a vast array of educational material that will help you understand how to think about the market that we're in today and what that might mean for your personal or individual investment objectives and goals. So look, that concludes the presentation. I think at this point, if we've got a couple of minutes, I'd be happy to take any questions that have come through the chat on the webinar. I'm not sure if you want to maybe select some of those. We're talking to the Daxi team now and just pass those on. I'll be happy to answer those questions.
I am just got a question from Andrew. He says, how do we know the metals are actually in custody?
Okay, good question. So we have an independent auditor. It's not Daxi. They're an accounting company. And every month they go in and audit the physical metal that sits in the vaults of our vaulting provider to make sure that that physical metal corresponds to the value of the tokens we have issued to the investor. Okay. So there is always this one-to-one relationship that is independently audited between the value of the token and the value of the precious metals that are physically stored with an independent provider. All right, so hopefully that answers that question.
Yeah, and just to follow up on that also, if someone wants to convert their digital token into the physical metal, how would they go about doing that?
Yeah, we can accommodate that as well. So if you want to, instead of selling your token rather and receiving fiat or local currency at the market rate, whether it's gold, silver, or platinum. You can also nominate that you would like to redeem your token for the physical metal. So that's definitely something that we can offer. The best way to do that is to raise a query through our support function. You'll see those support fields all through the Daxi exchange when you get onto the wealth platform. You can also see that on the website. So there's a number of different ways you can contact support, and we'll facilitate that transaction for you.
Good one. We've got a question from Dean. His question is actually around the Daxi coin and around the circulating supply of 7 billion coins for Q2. He wants to know, is Daxi still on course to launch the Daxi chain this year?
So I am incredibly excited to be presenting a major presentation in a couple of weeks' time with an update on Daxi coin and Daxi chain. We're going to share with you significantly more detail around the project, the status of that project, the future milestones that will help you monitor our progress, and indicative timeframes. So the answer to the question, are we on track, is very much so. And I'm really excited in a couple of weeks to share a lot of detail about exactly where we're at and where we're going with all things Daxi chain, and also obviously Daxi coin is a key part of that. Yes.
Great. Also, Jeff, just to let you know, yes, this session will be recorded and we can send it out to all the registrants after this. That's no problem. Another question from Andrew. So are we protected at the storage level and at a blockchain level with regards to precious metals?
Yes, that's right. So once the investment is made and the token is issued, that is a blockchain transaction that is immutable. The corresponding metal is then purchased and stored in the vault on behalf of the token holder. And then we have that monthly audit that's conducted independently to make sure that the metal that's held by the vaulting provider and the bullion provider corresponds exactly to the tokens that are issued. So hopefully that answers the question.
Great. One from Jeffrey. Is there an ABC bullion house in Perth that you're aware of?
I don't know.
Yes,
there's certainly
one for me. Yep.
Yeah, there's certainly extremely conspicuous in places like Sydney. I don't know if they have an operation in Perth. I mean, Perth Mint are obviously very active in Perth, so I don't know. The ABC Bullion website would answer that question.
Thank you.
Maybe one more question if we've got time, quickly.
I think we might have one more. We've got Sean's typing at the moment. We'll just hold for that. That might be it for questions, Ian.
All right.
Hang on, we've got one more. Sorry, Ian. How do the multiple keys work, and when are they implemented security-wise?
Okay, so that's almost a whole nother session. In terms of how they work, there's a sort of a technical and a non-technical answer to that. But the whole idea is that no single person controls all of the keys. There are layers of permission around any individual that does control one of the keys, and all of the keys must be used across those different individuals in order for the keys to actually be useful. So the best way to explain it is that no single person or even two people in our organization can ever do anything to even get access to understanding what assets are owned by which clients. Okay. So it's just another layer of security as it relates to our custody layer, where there are multiple keys that are required to be used in cooperation